If you like trading strategies with higher win rates, then this could be the video for you. In this video, I'm going to demonstrate 3 ways in which you can increase the winning percentage of a strategy using the exact same entry rules or criteria. All we're doing is swapping the exits to see what impact it has on the accuracy or the win rate of the strategy. The entry criteria for the strategy is going to be looking at longer term uptrends and then buying pullbacks, and looking for longer term downtrends and selling short quick rallies into strength. And I'm going to be demonstrating it on euro dollar using the daily charts. And the strategy in its original form actually works quite well in itself, so you're welcome to steal that as a trading strategy. Or maybe you can improve on it even further. I'll first show you the basic strategy using the basic entry rules, and we'll look at the results using it as a stop and reverse type strategy, meaning we're pretty much always in the market and we're not actually using a separate exit, because the exit is an entry to a trade in the opposite direction. So if we're long, we stay long until we got an entry signal to go short, and then we exit the long position and we enter a new short one, and vice versa if we're already short. Then we'll test 3 different exits and observe the performance report. Now, the type of exits that I'm going to show you are not really best to use if you're looking to buy into longer term uptrends or sell into longer term downtrends. We all know trend following strategies tend to have a much lower win rate anyway, so the exits I'm going to show you are only applicable to shorter term and especially mean reversion or reversal type trades. I'll be showing you the tests using data back to January 2010 through to January 2022, and I've included some costs. I've included $40 round trip. So euro dollar daily chart. Here's the entry rules. We want to see that the current close is greater than the close 40 bars ago or 40 days ago, because we're looking at the daily chart. So we're looking at a bit of a long-term uptrend, and we also want to see that the close is less than the close of 20 days ago. And when we see both of those, we want to go long. And the opposite for short trades. So the close has to be less than the close 40 bars ago and the close greater than the close 20 bars ago. It's dead simple, but it actually works quite well, which you're going to see when we look at the performance report. So that entry stays the same. Now, exit number 1 is a simple pip target. You probably all know these. A simple profit target. Might be 20 pips, 80 pips, 200 pips. We're going to test that out. We'll see what effect it has on the net profit, and mainly what effect it has on the winning percentage of the trades. Now, exit number 2 is the bailout exit plus a day delay. You've probably seen me use the bailout exit many times. And simply what we do is we look at the close of every bar once we're in a trade. And if we're in profit, we want to bail out. We want to take the profit and exit the trade. However, sometimes doing that without a day delay actually gets us out of the trade too quickly, and we don't capture enough profit. So we're going to actually test out a day delay as well. We'll test out 1 day, 3 days, 5 days. We'll have a look again what effect it has on the net profit, but mainly what effect it has on the winning percentage. And the last exit is the bailout with a minimum profit target. Now, same thing, we look at our trades at the end of the day when we're in a trade, and if we're in profit, we get out of the trade. However, this time I want to see a minimum profit. So I might say we only get out if we're in profit by 50 pips. If we're in profit by 30 pips, which is how the normal bailout exit would happen, we won't get out, because if our minimum profit is 50 pips, we need to be in the profit by 50 or above. And we'll test that out. It could be 50, 75, 100. We'll have a look and see what effect it has on the winning percentage. By the way, before we go over to the computer and have a look at the results for this simple but effective strategy, if you're looking for more strategy ideas, then at the moment you can download a free PDF that I've put together, and that includes 3 more rule-based strategies, a little bit like this one, but they're actually you, the viewers' favourite strategies. And if you search for the link down in the description, or I'll probably put a card up somewhere, you can get that for free at the moment. Now, let's go and have a look at the results. The first set of results then are looking at that standard strategy, which is just a stop and reverse. And you can see, look, we're always in the market. An exit from a short position is an entry to a long position, and exit from a long is an entry to a short. Always in the market. Okay. Now let's have a look at the performance report. Making 66,500. It's not bad. Equity curve is moving in the right direction. But let's look at the total trade analysis, and percent profitable is just under 60%, which I think is quite high actually for a strategy which is always in the market like this. So this is going to be our baseline. The second exit we're going to look at is taking a profit target, just a fixed pip profit target. And I happen to have 50 pips on the profit target on this chart, so we can see that we're getting out of trades within a few days pretty quickly. But I did run an optimization to see what the effect that the different pip targets has. And let's have a look at the results. I optimized from 0 through to 650 pips for the profit target. Now we can see from 0, and we're going to go in 25 pip increments. So 25 pip, 50 pip. Now this is our baseline. This is with no profit target, so we just stop and reverse, and we know we've got 66,500. Percent profitable, 59%. But look, we take some small profit targets. Look how the percent profitable jumps up. Now we do need to keep an eye on the average trade value, because if this average trade value gets too small, if that average trade value was 20, 30, 40 per trade, that would be too small. Even though I've actually included 40 pips worth of costs, we could be subject to slippage and all sorts of other minor things that do go on. So I like to see still a decent average trade. I mean, even at $113, that is possibly something that could work. And it'd be 92%. So we move to 50, 75, and you can see as we move down, the larger the profit target, the lower the percent profitable. So that's quite a clear picture. So that's exit number 1. And I'm going to show you some of these results in a graph so we can visually see them better in a moment. And exit number 2 is using the bailout exit with a day delay. And I've optimized that day delay. So -1 for the input for day delay is the baseline. We remember the 67,500. And then we've got stay in the trade 1 day, 2 days, all the way to 15 days. And again, it's a similar story, isn't it? The longer we stay in the trade, generally the more net profit we will make, but the percent profitable goes down. But this bailout exit with a day delay is a viable exit if you want to increase the winning percentage. Using a bailout of a day delay of 3 on the bailout exit does increase the percent profitable, but it does halve the net profit. So with these things, it's often all about trade-offs. Would you rather trade for net profit, or would you rather be right more times than wrong? So let's move on to exit number 3. Now this is the bailout exit using a minimum amount of profit. And I've optimized from 0, that's our baseline, all the way through to 10,000, which is equivalent to 1,000 pips. So looking at the results, we've got the baseline and then 250, that's actually $250, so that's 25 pips. So this is saying only get out if we're in profit by 25 pips at the end of the day. This is 50 pips, 75 pips, and similar sort of story again. We're going to get out of the trades quicker, but we are going to give up net profit. But we are going to increase the profitability or the accuracy of the trades. So let's have a look at some of these results now in the graphs so we can get a visual representation of how the numbers work. I've taken the results from the optimization report I did using the fixed pip profit target, so where I went from 0 to 650 pip profit target, and I've plotted them in a couple of graphs. Now, this graph is the percentage win rate versus the net profit, and this one is the win rate versus the average trade value, or how large each individual trade is. On the x-axis, we've got the percentage profitable, and on the left-hand side is the highest winning percentage, and the winning percentage decreases as we go along to the right. And we can see clearly that a decrease in the winning percentage leads to generally an increase in the net profit, and it's even more apparent with the average trade value. A decrease in the winning percentage leads to a much bigger average trade value. Well, there's my demonstration of how you can increase the win rate of a strategy just by changing the exit. I've shown you 3 different ideas, And I think you can see that in most cases, an increase in the profitability or the accuracy or the winning percentage, whatever you'd like to call it, generally leads to a decrease in the net profit. It's always a trade-off, but perhaps a trade-off which you want to take if you prefer higher win rate strategies. Higher win rates not only mean that you're going to be winning, obviously, a lot more than you are losing, but you're also typically going to get much less losers in a row and many more winners in a row. For example, using a 50 pip profit target like we were looking at, the maximum losers in a row was only 2 and the maximum winners in a row was 29. Whereas using no profit target at all, so just the stop and reverse, that baseline strategy, the maximum losers in a row was 4 and the maximum winners in a row was only 8 compared to the 29. So it's a real personal choice. Personally, I actually like trading for overall net profit, but there is something to be said about using a strategy which has got a high win rate. I encourage you to take these ideas and test them out for yourselves. But I hope you found what I've shown you useful, and if you have, please give the video a thumbs up. That's all for this one though, but I will see you in next week's video, and until then, this is Jared Goodwin, and thank you.